with high certainty, there's going to be volatility. It's very volatile.
Would that be the case with Chinese equities?
It will be as well, at least that's what I expect. I mean, there's two things here. One is where tariff is going to hit. I think there's multiple battlefronts. I guess Trump's approach, obviously very transactional, but he's also been transactional on several fronts, and each can stack up to a certain tariff. So my guess is from 10%, there's higher chance of it hitting higher than lower, right? So that's a risk. But also, it depends on how he deals with it. I guess the other side, instead of implementing a tariff, I think he's open to China buying more things. Now that goes back to the first trade agreement during his first term that was not fulfilled, how he maybe negotiated a new agreement. So there's quite a few things going there. I think an important side effect of this is what it means to stimulus. I expect Beijing stimulus to be responsive to tariff impact on the economy. So actually a smaller tariff could mean smaller stimulus. I'm not sure market takes that as well. Therefore, it's just going to be volatile.
Absolutely. I mean, that's certainly a dynamic that we've been tracking very closely. Tariffs mean stimulus. So we need to know the scale and the scope of those tariffs before that China can actually react so far as a sort of domestic policy offset here. I mean, so where does that leave sort of the investment approach for Chinese equities?
Yeah. So, I mean, if I look at it, given where tariff is heading and given it has started a lot more gentler than people expect, I kind of suspect the tariff response will be a bit smaller, or at least there's lower chance of positive surprise when it comes to March, etc. Of course, as and when it goes, when the tariff gets higher, etc., bigger impact on the economy, Beijing will react. But as of now, I would not bet on a positive surprise on stimulus in March. But I have more confidence that they will allocate that stimulus more towards domestic consumption. So part of the thing we're doing is to reallocate a bit more towards the consumption side, pockets where should benefit and the companies are strong. Yeah.
Yeah. And I mean, you mentioned the volatility, but are you sort of looking to take advantage of some of that as well? Because, there seems to be sort of investors out there in this part of the world that have been, trying to exploit what they call the sort of emotional overreaction to what we've seen with the tariffs. Because, one day we hear something like, give Monday, for example, last week as, a case study here. I mean, you had Japanese and Korean equities tumbling off the back of, their sort of auto sector, tech sector exposure to Mexico. And then the next day we were talking about those tariffs being on hold. Yeah. So are you looking to, as I said, to take advantage of some of that volatility? Is it your friend?
Absolutely it is. But it's quite nuanced and it depends on markets. I guess the way we see it is, as long as the business fundamental is intact, not affected by all this trajectory, if the share price has fallen, we can take advantage. And it comes in pockets. For example, in India, small mid-cap, I guess the impact of the decline is less related to tariff, but we're all trying to take advantage of that. The indirect impact of tariff, of course, is also on inflation. US Fed enters emerging market currency. So actually, we're seeing quite substantial decline in a lot of Southeast Asian markets. There are pockets there that we are looking for opportunities as well, given that share prices have dropped quite a bit across the board. Yeah.